Good morning, guys. It is Wednesday, the 4th of April, and this is the morning briefing. Let's just go and have a look at yesterday's price action on the DAX. We're going to look at quite a few techniques here this morning. Some of those you might be familiar with. Certainly, if you're a premium member, you'll be very familiar with these techniques. But if you're new to this or you're watching this on the video on YouTube, then some of this might be fairly new. But we're going to be taking a look at all kinds of techniques, multi-pivot lines, bookends, flags, wide range bars, double top, double bottom, forks, median lines, all this kind of stuff. And we're going to look at how we can use those live while we're playing the market. Okay, so the first thing that we can take a look at here is the gap. And most traders would probably expect for a gap to close. Now, this is a bank holiday weekend gap. So you've got Friday and Monday that FXCM wasn't open. I think some of the markets or brokers may well have been, but FXCM wasn't. So that's a pretty big gap. So often what you find with gaps like this is that they don't fully close because so many people are expecting them to. The traders on the other side are anticipating that expectation and therefore creates this trap. So I didn't really pay too much attention to that to kick off with. However, I did look at this, and if you just draw a very, very basic multi-pivot line, okay, it's a multi-pivot line simply because of the number of touches that it takes, similar to just a trend line, and you can use that as like a basic barrier. And as price breaks through it, didn't even test it on the underside goodbye, so there was it just ran away basically. So it shot off straight away. Nothing really too much to say on this, other than there was perhaps just one little area that was interesting, and it was this guy in here. And I think that's because it took out a few stop losses from sort of previous mini points where people would have tried to go long, and it just took that straight out. You might not consider that particularly significant, but if you actually just mark that level and just take it across, look what happened on the other side. And again, might be relatively insignificant, but I just find these price action nuances quite interesting. So that is not really a bookend as such, as in like two equal candles on either side of price action, but I just find the fact that it shot through that little zone quite interesting. So it might well have been a low volume node. All right, so as we got down to price action down here, we went long. It was actually about there, yeah, about 1:30. Now this clock is an hour ahead of when things were, but we had a signal from a strategy which we explain in the premium channels, BBRSI for those who are familiar with it, and we took a long, and I think it was from 9:30 or 9:29, somewhere around there, 9:29. I had a stop loss at about 9:06, and we were targeting 80, 1280 from memory, something like that. I can't recall the exact numbers off the top of my head, but it was about 6 to 1 arm on the reward to risk. So we were targeting 1280, which was somewhere in the middle of the gap. And yeah, might not have got the entry just perfect there. Just move that up a little bit. So something like that was what we were aiming for. So it got off to a pretty good start, that trade, and we just kind of left it to it. So what I was doing as the trade took off is I was just mapping out the little mini swings. We had a double bottom down here, which is always a nice thing to see when you've just taken a long. Adds an extra little bit of validation, justification that the traders got a high probability of succeeding. So you just simply start mapping out the mini swings. These are minor swings, and you'll notice a pretty small reaction leg there, but it's still quite valid, and you just make a note of those. And they're confirmed once the higher lows are confirmed once the previous higher high is taken out. And so that's just your basic swing technique that you can use. Now, that was a spot where I was suggesting to people to maybe look at taking some profit because we're probably going to hit a barrier. And the reason why is that we'd had this first swing, mini reaction leg, followed by another swing without any kind of pullback. And we had a little sign here that maybe things were going to start to slow down, but it didn't. Just took off again. And then you had exhaustion at the top of that impulse wave. And that's normally a good spot for a turning point. It ran straight into a previous level of resistance as well. So it kind of just ticked the boxes that would be a spot to either move your stop loss to break even, take a little bit of a partial profit maybe, or even close the position out altogether. Probably wouldn't have reversed from here, but more aggressive traders definitely would have. And that was an area that looked quite interesting for me because I started to think to myself, okay, well, if this whole move here of these two miners is like the first impulse leg, and if that's your reaction, then maybe we've got a zigzag balance point on the go here, where something like that might happen. Difficult to know how far that's going to go, but that was kind of my thinking, was whether or not that would actually work out as some sort of balance point that we could look at using. And if it was, you can just take basic tools to just kind of draw a 50% line somewhere in the middle of that little zone, and try and anticipate where price might head up to. I like that little area there where the 50 line is, because it's kind of like a mini swap, little swap zone. So it was previous support there, it was resistance here, again, resistance there, and then it zoomed through it. So, you would mark out something like that and suggest that that's a forecast area to go for. So that's something you can do. Okay, so as we follow it forward, I think we may have taken some profit. We took profit at 45. Well, I did. I think some guys held it a little bit longer. I think it was a bit further into this little cluster here. And you can still follow these swings through as it goes. In fact, you see this balance point we talked about before? It was not that far away, was it? Not that far away at all. But you can still follow these swings through, and you've got a higher high up here. Potentially that's the low because you've broken out to a new high up here. And you still follow it through and see how it works out. There you go, look. Now this was a warning here because you had a mini low placed here, followed by a higher high there, but the low was taken out. So that's normally a pretty interesting signal to suggest that the trend might well be coming to an end. First of all, it's kind of a basic double top, but the rhythm, the timing between the swings has compressed. And that's a sign that suggests that something change in behavior is about to happen. So that little cluster of price action would be a good spot to consider taking profit. And I actually think that might have been where we did take it, where it was about 2:30, I think. So it'll be more like 3:30 on this one. I can't recall. But somewhere around this zone at 12:45, the position was closed out. And unfortunately, for those who stayed in, it kind of ran into quite an interesting reaction leg. But yeah, so watch out for these. So map out your basic swings. And when they start to compress and when they start to squeeze in like that, and you get double top or a double bottom if it's the other way around, that's a warning zone. And what you would have probably done is started trailing your stop loss to the second swing back. So at this stage, your second swing back would be there. And when it takes out and forms this little low there, and then it takes out the previous high, your second swing back now is there. So that's where you'd start to trail your stop loss. So that's another technique you can use. Second swing back. All right, so we've got wide range bar here that we pointed to. So that's another bit of terminology. WRB is wide range bar. Actually, I think as well, I wondered whether this down here was a flag. It's not a particularly good example of it. The one I guess I'm talking about is just that little area of price action there. So as it shot up, it's not really much of a spike. Bit of a flag I was considering, but I'll leave that one off for now. All right, so what else have we got here then? So we've got the first pivot from our first high here. I wonder whether we would take the low here. It's probably that one there. And now we've got a high up here. So you can use those three pivots. Might be fishing for C a little bit. But if you draw it on, and I'm just going to clear out a few of these things just to make the chart a little bit more visible. So we'll just remove this zigzag. Maybe remove that balance point. See what I mean with the balance point? Forecasted the top, look. Just a simple bit of an area. When you start to see how we get one swing and a pullback and the second swing, start to forecast where a balance point can be, and you can anticipate how to trade the remainder of that move. And when you put in the fork for this particular line, what I like is the rhythm of this. And price comes down to the median line. Look. And depending on how aggressive you are as a trader, what you might do is you might take another fork from either this low, or even here you can take an IML, which is an inside median line, from that particular low of the um, zigzag, if you like, and just draw it up to those and assume that this is the reversal point and you want to take a reversal on that. So let's just turn this fork off here. And you'll notice again, it takes out the median line. So if you really wanted to, I mean, because that's kind of like a valley formation, it's a V, isn't it? So you maybe want to try and use a different fork. Maybe you'd use a modified Schiff or something like that to try and find the top of this move. And again, it's a little bit fishy because you're trying to anticipate where it's going to top out. So you just kind of watch it a little bit. Looks like that's the top there. And then you see whether or not you get any kind of reaction on that down to the median line. And now you formed a mountain. So you could, if you wanted to, put another modified Schiff on the mountain. Lower median line tag up to the median line. So these tools are really, really useful to be using, and you can put them on the market while it's running live, and you'll see again a median line tag straight through the median line, zoomed it, come back to retest it, and then we're into today, and we've got a completely different setup. So there's some really, really interesting tools, as I'm sure you know. Yesterday was an interesting day. I think we did have a loser. There was a strategy which suggested that we could have taken a long down here, but unfortunately I didn't take that. Well, it was actually fortunate I didn't take that, but unfortunate for the strategy because it would have been a loser. So I got in on the second setup, which turned out to be a nice move. And I think it was about 5% or something like that added to the account. So very, very pleased with that. All right, so there's some of the tools. Let's go and have a look and see what we can expect for today then. So we've had some interesting developments along the Chinese tariff war, US-China trade war. And so I think they've come out and added some tariffs on 106 odd products. So that has created a little bit of an effect on the market. And if you just take a look at this straight away, just eyeballing this particular move, that looks like a balance point straight away, right there. Don't know if you would agree with me on this, but again, if you just take a very, very basic line through the middle of that, you might sort of anticipate that that is either already done and complete, or maybe there's a little bit more left to go on this one. But I'd like to see how that one would settle up. I would have thought it would have been somewhere like that. So maybe we've got a little bit further to go. But keep an eye on these things, that you can map them out as they form. I think what I was also looking at here is I'm trying to spot where it would have been. No, I can't. Once this particular bearish leg is complete, what you might want to do is just take a very, very basic median line from one of these bottoms, take it from the low ideally, and just take a fork from these. And you can do what Roger Babson, the founder of the median line method, or the action reaction specialist on the financial markets back in his day, would have said that this would have been your profit target. So if it was going to find a reaction from here, or if we find out that this actually is the move, then that would be a profit target that you'd probably want to aim for. So that's one strategy. At the moment, it's heavy. So buying into this would be high risk. It seems to be a little bit kind of against the trend. Certainly, as if you imagine mapping out the move like this, that was a wedge formation, and we've clearly broken to the downside and not kissed it goodbye. So it's off to the races. But taking a wider view, excuse me, 11,705, 12,167. These are the range defining levels for the DAX. It's been trading in this wide range for some time now. We've been finding some minor swings within that range, but effectively it's still moving sideways in that wide range. So I guess you could just take a simple range trading strategy and just say, right, I'm happy to buy anywhere in this kind of zone, happy to sell anywhere in that kind of zone, and either sit on the sidelines or use a range trading strategy in the middle, or just wait for the opportunity. But I think it's a Warren Buffett analogy that used to say that you can pretty much stand there and swing your bat and stand still and let all these pitches come flying past you, and just wait for that fat pitch that's lazy to swing for the fences on those. Don't have to be trading 65, 70 times a day. You might only need to trade 2 or 3 times in a week if you catch the right setups. So the volume profile that I've drawn up here is a composite of all of the data you can see. You can see the distribution is relatively normal, and we've got 2 high volume areas right in this middle here. We've broken to the downside, so you'd imagine the price is going to probably want to come back and test that zone. So if you are bearish, then that's the spot you probably want to look for, to maybe aim for the bottom of the range. Alternatively, wait to get back inside that zone, trade a little bit more sideways, coil up one more time, and then wait for another burst. But for as long as these or these tariff wars continue, probably looking to favor the downside until water is poured on fire. All right, guys, so that's kind of what my thinking is for today. Hope some of that stuff makes sense. If you've got any questions, send me a message on Telegram. My username is DaxTrader, or send me an email. You can find the details on the website. Otherwise, leave a comment on the video. Make sure you send a like on the video if you like what the content is, and subscribe as well. That would be great. All right, guys, take care. Have a cracking trading day, and I'll see you again tomorrow.